Moderator, it's my privilege as Chairman of Investors Trust to report to the General Assembly, and I ask the Assembly to accept the annual report and financial statements of the Investors Trust for the year ended 31st December 2020. Although the annual report for the calendar year 2019 was published, no oral report was made to the restricted General Assembly last year. Accordingly, I will cover both of the previous 2 years in these remarks. As it happens, 2019 was benign in financial terms. Our largest fund, the Growth Fund, gave a total return to investors of 17%, in line with the benchmark set for our managers. The Income Fund gave a total return of 9.2% against the benchmark of 8.2%, and the income distributed was maintained at the same level as previous years. Of course, these helpful conditions were thrown into confusion with the arrival of the coronavirus pandemic in the first quarter of 2020. Equity markets fell heavily, and interest rates were reduced to minimal levels by central banks. The worst of the financial effects occurred during the first quarter, but thereafter a patchy recovery took place for the rest of the year. Some sectors actually benefited from increased demand due to such features as working from home and online shopping, but other sectors continued to perform poorly, such as travel, hospitality, and high street retail. Interest rates were practically zero, meaning that the income earned and paid from our income and deposit funds were lower than in previous years. Over the calendar year of 2020, our Growth Fund produced a small negative total return of 0.6%, underperforming its benchmark return of plus 3.1%, largely due to low exposure to highly rated technology companies and to holding a higher proportion of income-producing shares than would be there in the benchmark indices. Nonetheless, over 3 years and 5 years, the Growth Fund has marginally outperformed its benchmarks, even after including the underperformance experienced last year. Due to cuts in dividends from many companies, the income for investors from the financial year 2020 will be 13 pence, which compares with 17.25 pence in the previous year. Our Income Fund suffered in the early months of 2020, but against its benchmark, it recovered almost all the ground lost in the early months as the year progressed. The total return of capital and income for the year was 6.9% against the benchmark return of 7.2%, and the relative performance over longer periods continues to be excellent. Nevertheless, the income component of this total return fell from 50 pence per unit in 2019 to 42.5 pence per unit in 2020. And the interest paid to investors in the deposit fund reduced as the year progressed due to the reduction in the Bank of England base rate to 0.1% early in the year. And of course, payments of interest will continue to be low from the deposit fund until the base rate moves upwards again. And now I want to say something about our communications. Investors Trust serves church investors large and small, both central committees and individual parishes. Our total funds at the end of 2020 amounted to nearly £470 million, but whether our investors are large or small, their funds are held to meet both current needs and future liabilities. And the discipline of setting and maintaining annual budgets applies to all irrespective of their size. In rapidly changing conditions, the trustees issued bulletins to our investors to explain the likely impact for them. And our ability to post information quickly on the main website was very helpful. And several treasurers also took advantage of our offer to provide them with email alerts when these bulletins are being published. We want to maintain and build on these innovations in communications, and not just in times of financial turbulence as we have seen. I now want to say a little bit about an acronym which may be new to many, ESG. ESG stands for Environmental, Social, and Governance, being three general themes which investors regard as needing increasing scrutiny. Financial analysis is still essential, but wider considerations also matter now when choosing sustainable shares and other securities. But this is not new territory for the Church or for Investors' Trust. We have applied exclusions to several industrial activities, such as tobacco, for many years. Furthermore, we've been active members of the Church Investors Group, which coordinates activities for British church investment bodies and circulates information and data which is of common interest to these bodies. Although climate change is certainly one of the dominating topics, there are many other important considerations as well, such as modern slavery, employment practices, water stewardship, and even executive remuneration. As investors, we have some ability to influence those companies in which we invest, but it's most effective when we are shareholders and when we act in concert with other shareholders. This is mainly relevant to the Growth Fund, where our managers, Newton, act within agreed limitations to avoid investment in certain sectors or companies, but Newton also exercise their own critical analysis when voting in respect of companies held within our portfolio, based on the principles we have agreed with them. Newton report to us on their voting decisions and also use tools to calculate quantitative measures, for example, to assess the carbon footprint or the carbon intensity of our fund compared to an average fund. This helps to assess both the relative position of our funds against the market, but also whether we continue to be leaders in this respect. But I wouldn't want to leave you with the impression that precise measurements of ESG factors is either an easy or a reliable process. It's not surprising, really, particularly when dealing in ethical or environmental matters. For example, what stance should be taken on working conditions in cobalt mining in the Democratic Republic of Congo, when cobalt is an essential element in the production of lithium batteries, and lithium batteries are critical for reducing fossil fuel emissions? Or should Western companies and banks be trading with countries with poor and deteriorating human rights practices, of which China is rapidly becoming the most significant? For several years, we have engaged with, firstly, Church and Society Council, and latterly with Faith Impact Forum on ethical and environmental matters. During this period, the focus has been largely on investment in oil and gas companies, and whether or not such investment is compatible with the concern we all share to slow the rate of climate change, and indeed to meet the more stringent targets set at Paris in 2015. However, a much wider range of issues needs to be addressed as well, and Investors' Trust enthusiastically supports the joint deliverance proposed by the Assembly Trustees, by the Faith Impact Forum, and by ourselves to investigate how environmental, social, and governance issues can be best integrated into our decision-making. We look forward to working with the new committee being established, aiming to reach practical and effective ways of tackling complex issues so that our managers can be clearly mandated. Communications are, of course, also important, and we want to ensure that our investors and the wider church are kept informed of how the funds we are managing are being put to work. The committee will also investigate the ways in which funds can be used to target positive social benefits. But we acknowledge that our main focus will be to serve our investors, large and small, so that their own needs and ambitions may be met because of the returns they receive on the money placed with us. And now a few remarks on our office bearers. In accordance with the terms of the Constitution, Mr. Roger Nesbitt retires by rotation, and we seek to reappoint him from 1st June 2021. And in November 2020, the trustees appointed Mrs. Jean McKeown and Mr. John Miller as trustees, subject to confirmation by the General Assembly. So accordingly, we seek the consent of the Assembly to appoint Mrs. Jean McKeown and Mr. John Miller as trustees for a period of 3 years from 1st June 2021. We also record the retirement of 2 very long-standing trustees at this time. Mr. Alan Aitchison has been a trustee throughout the existence of Investors Trust, since it was established in its present form 27 years ago. And we thank him for his long, exceptionally long, and very welcome contributions over this period. Mr. Gordon Young has served as a trustee for 12 years and stands down as the chairman of our audit committee. His oversight and attention to detail in the management and reporting of our financial affairs has been particularly valued. I would also want to record my thanks to the Treasurer, Secretary and staff of the Investors Trust, who ensure the smooth day-to-day operations of the Trust and are the front-line point of contact for both our investors and our investment managers. And finally, I acknowledge with gratitude the time and effort freely given by our expert trustees. Moderator, I submit the report and accounts of the Investors Trust, and as I am not a commissioner, I ask that one of the clerks moves the deliverances.